It's Friday, April 10th, and the markets in New York are open. And the big number this morning is $500 billion. So, that's the size of General Electric's financial arm, GE Capital. And in the company's biggest strategic move in years, GE will unload the bulk of that business, which consists of lending and leasing operations and a portfolio of real estate holdings across the globe. Hello, everyone. I'm Dan Kleffler in New York. So GE CEO Jeff Immelt says that the units that comprise GE Capital will be sold or spun off over the next couple of years, and that starts with today's $26.5 billion sale of the real estate holdings. They're selling it off to Wells Fargo and Blackstone Group. What does it all mean? Why are they making the moves? Rick Newman from Yahoo Finance is on this Friday morning. So, Rick, a fundamental restructuring of the company. Why are they doing this now?
They're not doing it just now, Dan. This has been underway for a long time. This is really about a 20-year story going back to the 90s. Jack Welch was CEO of General Electric. He built it into this conglomerate that had all these different business lines, including this huge finance unit, which turned out to be one of the biggest banks in America. The joke about GE back then was that it was a bank masquerading as an industrial company. That turned out not to be such a great idea. That banking unit, or the finance unit, it foundered during the 2008-2009 financial meltdown, caused GE all kinds of problems. It actually threatened the viability of the company. That unit needed to get some bailouts from Washington. And what Jeff Immelt, the current CEO, has been doing ever since then is trying to find a way to sort of wind down these parts of the company that are not really part of the core industrial operation. So this has been going on since about 2008 or 2009. It just takes a really long time to get rid of assets like this at a company as large as General Electric is. Yeah,
and you're talking about the reputation that it got then from regulators as well, because they called it a systemically important financial institution, all because of this finance arm. How important is it then for the company to get rid of that kind of classification?
It's really important. That might sound like Washington gobbledygook, but that designation is extremely important. Basically, what it means is General Electric's financial business, not the rest of it, but just the financial business, is considered so big and so connected to other parts of the banking system that it has to basically come underneath the strictest financial regulations in Washington. These are the regulations that apply to banks such as Citigroup, Bank of America. In other words, if these banks are so big that if one of them were to fail, it could potentially bring down the entire rest of the financial system. That means there have to be very strict regulations on the amount of risk those units can take, and that's obviously a real impediment to a company like General Electric, which has decided it doesn't want to be a bank anymore. So they're saying we want to get rid of this unit so that we no longer have to deal with these relatively severe regulations, give them more freedom to operate, and hopefully become more profitable.
What about the manufacturing side of things of this whole equation? Because, it is still existing here in that high-end industrial space there. And is it smart then for GE to make this kind of move?
Yeah, well, that's what Jeff Immelt is saying. He's saying, well, we've decided that is our core business. This is basically what people think of when they think of GE. Aircraft engines, power turbines. They make a lot of medical equipment. Basically, he's saying that's where we're going. That's what the company's going to be. This is important for shareholders. Immelt has really been bashed on Wall Street. They have a really depressing stock chart. If you look at their chart, the stock was way higher in the 1990s, believe it or not. It has sort of ticked upward a little bit during the last 5 years, but it has severely underperformed the S&P 500. And this used to be one of the crown jewels of corporate America. This is one of those classic companies that's been around for more than 100 years. That it was a widow and orphan stock. You always wanted to hold stock in a company like this for the long haul, and it has really let down its shareholders. So they really need to do something to get the company back in business.
So how's Wall Street reacting then recently because of all this news?
Wall Street's pretty happy on this. The stock was up something like 7% in pre-market trading today. So, there have been a lot of different things going on at GE trying to get it out of the rut that it's been in for almost a decade. And shareholders have not been real psyched about many of those things, but this one they seem to like. So they like this divestiture. They like GE going back to basics. I think there's a lot that still is involved in the execution. This is complicated stuff. But Wall Street likes it so far.
All right. Rick Newman from Yahoo Finance. Rick, thank you so much. Have a good weekend.
Sure thing, Dan. You too. See you.
Keep up with the latest headlines right here on abcnews.com. You've been watching The Big Number. I'm Dan Kleffler in New York.